Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you.
Mike, gold is now picking up again. Can you tell us about it?
Yeah, today it's the thing I'm most interested in. I mean, I know there are a lot of people in the audience that are interested in gold too, or invested in it as I am, or in mining stocks, and we've all had to suffer through a consolidation or pullback that began last year around August. Gold went above 2,000 and pulled back over the course of the month since then, down to 1675. The pullback also affected mining stocks and the price of silver. The price of silver has been locked in a trading range since around that same period when it peaked in August, with the high marked by about $28 an ounce and support around 24. It's currently trading just below 25. I know there was excitement for 2 or 3 days over GameStop and Reddit message board people saying they're going to try to make a short silver squeeze, but it just gapped up, touched $30 for a few hours and pulled back down to 24, remaining locked in the trading range. So in the end, since August, that's been the real story. The metals and the mining stocks locked in a trading range. Now that's not that's bearish in itself. It can be a top, but it can also be a sideways consolidation in a bull market. And the most important indicator when it comes to gold, silver, and mining stocks are how the mining stocks perform relative to the metals. So in a bull market, they tend to go up more, and in a bear market, go down much more. So in a bear market, if gold pulls back, say 10%, mining stocks can fall 40%. So what's happened over this period of sideways action overall, consolidation since August, is that mining stocks have held up fairly well with the metal. There's a relative strength ratio that actually measures it that I use, and it's basically higher today than it was on New Year's. That's the GDX divided by GLD ratio. That's how I use to measure it. That's bullish. And that says that this pullback that happened starting in August was a consolidation, not a bear market type of event. And therefore, when it would get down to support, it's been a great investment buying opportunity. All that said, people, especially in the United States, have fallen completely asleep on gold. They're just not really paying attention to it, much less mining stocks. They've been more interested in what's been going up the most in trying to buy and chase that. Things such as Tesla last year or Bitcoin in the last quarter of last year, stocks like Apple, the NASDAQ 100. That's what's captured the imagination of so many. Stocks like GameStop, which made the news earlier this year. Those are the things that people like to, want to speculate and gamble on. And so gold and silver, the mining stocks, just hasn't attracted people's attention, except for hardcore investors in it, which I count myself and much of your audience, but not small traders in the United States, not people with Robinhood accounts or watching CNBC. But I think that's about to change because what's exciting me about it right now is that it looks to me like this consolidation is reaching an end and we're about to start a real rally. So two things that happened. First, gold itself made a double bottom in March off of the 1675 level. It now has short-term resistance at 1750. It's trading right below that resistance level. If it breaks that, then we can expect it to start a rally up to long-term resistance, which is basically the 2000 area now. Such a rally, if it takes place, and I think it will this summer, maybe starting before the next time we even talk, will cause mining stocks to go up much faster than gold. Silver probably will go through $30 if gold just gets to the 2000 area. So there'll be renewed excitement and interest, which we just saw a glimpse of during those days when Reddit people got interested in it. But the mining stocks themselves are on the verge of breaking out of this consolidation resistance zone. Right now, short-term resistance on the GDX gold stock ETF is 35, and GDX is trading not even a percentage below that level. It's already closed above its 50-day moving average, and if it finally, can close above 35, it would break a downtrend line that you can draw on all the highs going back to August, and I think we can then expect it, to rally over the coming months. Some stocks are already doing this and breaking out. Newmont is already above its March high, just to name one. But another thing that's happened is many small cap mining stocks, while gold fell to 1675, they basically held up over the past couple of months, showing once again that this has been a bullish buying opportunity, not a time to sell and get scared. So I think brighter days are ahead for mining stock investors and gold and silver people too. And I think now's the time to buy and get on board. And what I think is just the very start of a rally. I mean, if you think of it like a rocket, it's just been turned on. And I think now's the time to jump and get on board before it leaves the launching pad.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Mike Swanson. Mike, the IMF is now predicting the world economy will grow at 6% this year rather than the 5.5% they had predicted earlier. Is that good news for our stockholders?
Yeah, I mean, I would say so. It's been upgraded, as you mentioned, but the economic projections for the GDP growth in the United States have also been upgraded. I'm going to load it up and see exactly what they are as we're speaking. But anyway, it's all been upgraded, and that started several months ago as we entered this year. And it's still a lot of questions about it. One troubling thing is that inside the global economy, it's really the United States and China that are going to fuel most of the economic growth this year. In fact, the IMF put out a report saying this over the weekend and saying this is going to be a potentially big problem. You don't really want to see, growth focused just on two countries. I'm a little wary of taking predictions of the growth too seriously. I mean, we do know it's going to grow. The economies are going to get better because of where they were last year, if all the shutdowns and what's happened, with the COVID situation. But the U.S. is coming out of that. It appears quicker than much of the rest of the world. at least the Western world. Much of Asia is coming out of it quicker. There's some countries in Asia that hardly even suffered at all, such as Vietnam. And that's a bright spot in Asia that's also positioned to grow better than much of the rest of the world. But where there's question marks about this is how much of the growth is going to benefit the average American or average person. We still have high unemployment, and how long will it take for the economy truly to get back to what it was? Could the virus come back in the fall in the United States to some effect? How many people are going to take the vaccine, or how many people already have had the COVID disease and are immune already? There's so many wild card factors, but I think the biggest wild card factor out of all of them is what's inflation going to be like, because I think inflation's coming. Oil prices have jammed up over the past 90 days. Commodity prices have done that too. We saw both oil and agriculture commodities make secular bottoms last year in the spring, when oil actually went negative in the futures market, and they've all had massive rallies. In fact, agriculture, commodities have rallied faster than the stock market last year. And last week, we saw corn prices one day go up in the futures market 10%. They had to halt the trading because they went limit up. These are things no one's really talking about, but it's a warning sign that inflation is coming. And we're going to see the start of it in the next 6 weeks when we start to get CPI numbers. And even the Federal Reserve is saying this. Jerome Powell at last month's Federal Reserve meeting was trying to prep everyone for this coming and not to be alarmed by it, by predicting that inflation CPI will be 2.5% this year growth, and then predicting that the growth will go away next year. So he's basically saying inflation's coming, but don't worry about it because I'm not going to have to do anything about it because I'm predicting it'll go away. That reassures stock market investors to double down, go on leverage, take more risks to be a part of the market rally, when I think what people really should be doing is moving money now into gold and silver, especially if you got a huge amount of your money, which most Americans do, invested in bonds, which yield nothing and are now in a bear market, trading, down for the year, below their 200-day moving averages, and really a hopeless situation. And you don't want, 30-40% of your portfolio, which is supposed to be safe, invested in things that are now useless, because inflation's coming, and that's going to affect bonds even more, making them fall in value, the bond funds, that is. But what I think the biggest question is inflation truly going to go away, as Jerome Powell predicts, or not? Or will it even be bigger than he predicts? Because, we're seeing these food commodity prices go up. Oil, in fact, and the energy stocks since the election, since New Year's, in fact, had the biggest gain in one quarter ever inside the S&P 500. The energy sector, that is, inside the S&P 500, had the biggest quarterly gain ever. And I think that's a significant thing. I think these people are pricing in higher oil prices than we currently see. So this, I think, is going to perhaps be the true question, because real inflation isn't something that, if it comes, and this is, doesn't just be a flash in the pan as they're trying to predict, but is a real trend that's just, starting this year, something we haven't seen in the United States for a very long time, really since the summer of 2008, when oil shot up for a couple months and then came back down. But, widespread inflation is even bigger than that would have been.
And of course, the government official inflation numbers do not include fuel or housing, which makes the numbers very convenient for them. But for the average person, look at how much housing prices have gone up in the last few months.
Oh, yeah. Housing prices are up 10% in the United States nationally since the pandemic began in March, which is amazing. I mean, when it started, I thought the opposite would happen, right? Because, offices are shutting down and restaurants or businesses going under and so forth. You thought, oh, rents will drop. But no, the government stepped in and, stopped foreclosures, helped people pay their rent. And then there became something of a housing shortage as a lot of people decided not to move anymore, at least for the time being. And also houses for sale on the market diminished because one of the main sources of supply are foreclosed homes that the banks then take over and then put up for sale. Well, that's not happening. It will come back. That supply will come back probably in the fall, but it's still not there. In the city I live in, I was told by a real estate agent that there's on average 300 houses for sale, and now there's like 60, So this is the sort of thing happening across the country. And then add that on top that because of the low rates, record low rates, that people, and the stimulus money they get, some people obviously throw it in their Robinhood account, and try to trade the stock market, but other people are buying real estate all over the country as an investment too. Individuals, hedge funds, pensions, so forth. The low rates gives you free money basically. And when housing prices go up 10%, it's like you're, it's probably, one of the best investments, someone, can make. Borrow money, and buy, real estate when it's going up like this, as long as it doesn't top out. But, it seems like a good investment to me, especially if there's going to be inflation, as I think there is. But you do got the specter of, when more supply comes on the market and banks start to, be a part of that.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, one of the things driving real estate prices in both Canada and the U.S., people are escaping their cracker box apartments and trying to find a single family home where they have a backyard, room to roam. If you're a couple, you're finding out with all the Zoom meetings, you need your own space because you don't want your voice bleeding into theirs. And we just saw a survey that says 1 in 3 workers would rather quit than return to working in the office full time. What does that tell us about the outlook for commercial real estate?
Wow, that's an interesting survey. Yeah, I read a story, I think this last week. It was in the New York Times about the real estate market there, and basically saying that, all these people have left the office. The company's told them to leave the office, and the governor or the mayor of New York has brought back 90,000 workers. Or actually, I think it was both the governor and the mayor. They're making government workers return to the office and is a way to try to bring confidence back in office work and, in that city. But the private companies aren't doing that. That most of the private companies are now, basically planning to make this more or less permanent, not to have, everyone at the office, have them come, have less people in the office and have the rest of the people, have less people working daily in the office that have everyone else just, come, less frequently, as a way to cut costs. That's the primary motivation of the companies. And now, I didn't know that survey, so apparently the workers want to do that, or the majority of them. I'd be cautious, if I was working for one of these companies, I'd be fearful that if you work at home, that they might set it up so you're kind of working more hours than you ever planned on, that you kind of could be working nonstop almost, with meetings scheduled all the time, or, random times, and your schedule might not be the same, but, you don't have the commute. But it does seem to be a permanent change. I don't know, what that will do to the office real estate market. It's hard. I don't think it's going to be positive, but they'll just have to adapt, use different usages for these offices if that's the case. And also, I do think inflation's coming, so it may not matter anyway. It may just hold the prices up over the next decade.
Well, they're going to have to find new uses, because even if a quarter of the workers or 10% don't return, that still leaves a lot of office space that's going to have to return revenue. I thought if you have empty office towers, you could try vertical farming in them, at least get some return for it, and it might be advantageous tax-wise because farmers get tax breaks other people don't get.
Yeah, there's an idea. You can start dope farming operations or cannabis farming. Operations at all these offices.
or put have an office building that's half residential, half office. So you don't have to work at home, but home's really nearby. What about the ancillary services, things like shoe stores, boutiques, little coffee shops? They relied on those office workers, and if they don't come back, that still means the core of many cities is going to be a pretty dead space. Vancouver right now is basically in the downtown core has been taken over by the homeless.
Yeah, well, that's something that's happening too. Is there's homeless I think all over that weren't there before. Even in small towns now.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.